Welcome back to another episode of Fun Friday with two awesome guests here, some golf buddies. They are also Arizona. I can't say Phoenix locals because I believe you guys are technically in Scottsdale, but one of the
Yep.
same, tomato, tomato. We're actually going to be playing the date or on Friday, not tomorrow. This is recorded on Thursday here, but we're playing. Will have been played well before this is released. But that said, super stoked to have a conversation with the two founders of Twin Lux Capital, Aaron and Jacob Thomas. How are you both today?
Doing great, Craig. Thanks for having us on.
Yeah,
Yeah, I'm
awesome.
doing great as well.
Good. Well, we got connected through good old Raise Masters, which is a great networking community and whatnot. And I think you guys have a really cool story. I think a lot of people now more than ever are super interested in entrepreneurship. Obviously, babyface, you guys don't have as babyface like I do, but you're obviously both very young, right? So that said, you're able to kind of take a plunge into really just raising capital full time from the world of, kind of going through the background of making money from brokerage, doing this, doing that. So I think would be really cool to talk about, that path, that journey, and how, if you were to talk to your younger self or other people who are looking to get into an entrepreneurial setup, how do you get there? What's the roadmap like? How do you develop cash flow systems where you can feel comfortable taking that plunge? Because I remember when I was selling homes, I had to live at home for a while. There's a better, greater way to do it. There's not more just one way to do it, but we'd love to hear kind of that journey and path. So without further ado, how did you get to the chairs you are today? What was kind of the background for both of you guys to be able to capital raise full time?
Yeah, I guess I'll kick it off. Really, the biggest thing for me was just educating myself first and then getting started. I know really out of college, it was a weird time because COVID was just happening and there was kind of this gap. And during that gap, I ultimately just tried to make the most of it and really do the most for myself. So reached out to a lot of people in the commercial real estate world. We have some family, friends, and close family really in the commercial real estate world. So I really just kind of read up on as much as I could. I know those little yellow book or yellow little purple books of Robert Kiyosaki
The
just kind of
best.
helped flip the switch and really was that light bulb moment of like, why am I not doing this? Just graduated college, like am I going to even use my degree if I want to go on this path? So ended up picking a lot of brains in the commercial real estate world. And the biggest thing for me, they said, was just hit the ground running, learn as much as you can, and then really just scale from there. So that's what I did. Started as a broker with Marcus and Millichap in Chicago, worked there for a little over a year, and then kind of bounced around with some other commercial real estate investors and sponsors, just picking brains, being an analyst for them. And then ultimately, me and Jacob knew that we wanted to really go out on our own, and that's really what our mentor was pushing us towards. So we moved out here to Scottsdale, Arizona. Started out with the short-term rental and Airbnb business. Have a few of those that we still currently run, and then from there, we knew that was just a good starting point because that's the biggest thing is just to start. And we just took a full leap of faith and said, you know what, we're just going to go head first at this and we're not going to look back. And that's exactly what we did. But we knew that was a starting point. And then from there, always knew that commercial real estate and commercial real estate syndication was the goal, specifically multifamily. So from there, ended up joining Raise Masters, which is a great group. Have their conference here in a few weeks. Excited about that. And started meeting a lot of new people and really started to figure out a way into multifamily commercial real estate, with that being capital raising and starting to invest in deals as a limited partner, as a co-GP, ultimately just to get our feet wet. And then that's what we're currently doing right now, and then looking to take further steps in the future. But yeah, if there was anyone listening, I would just say biggest thing is just to get started, educate yourself, and then just get invested in a deal. It doesn't have to be a large investment, but at least get some skin in the game to start learning and knowing and see what the returns you're getting. And then from there, you're not going to want to look back.
Yeah, and similarly, Jacob, would love to hear your spiel and story. Obviously, Aaron was at the brokerage world, kind of get going there. How did you start and get kind of your springboard there?
Yeah, so we had similar but very different paths, throughout school. I was at the University of Michigan studying in the sports management field. And that was something with Aaron and I growing up, three brothers. It was something that we were always revolved around sports, whether it was football, hockey, basketball, you name it, we were playing it. So for me, when I was going into school, I'd never really had real estate on the radar of any sort. So I was always just kind of, driven down the sports path and always thought that I would end up doing something within the sports field. And then I actually graduated the University of Michigan during COVID, like Aaron mentioned, and was blessed and fortunate enough to accept an inside sales position role with the Detroit Tigers and the Detroit Red Wings. So I was actually working for both teams, which was very cool. And then from there, I developed really quick and actually got promoted within the first 3 months there. Took a new job with an account executive for new business. So I was doing more B2B sales pitches, working with different businesses within the Detroit area. And I feel like that's something where, I was only there for a short period of time. I think I was there for about a year and a half. But I developed a lot of really good skills and traits that have transitioned into our new role now. Just being able to talk to those high net worth individuals, I feel like has transitioned into being able to have good communications with those high net worth individuals. So that's something I've taken from that role. But while I was working there, that's when Aaron was in Chicago working with Marcus and Millichap. So I was always kind of keeping tabs on him, was really interested in what he was doing in his day to day. And like Aaron said, I got my firm foundation on just really starting to learn and educate myself, and then from there, like Aaron said too, we got our start in Airbnbs. Started to do a lot of research there, and while I was working with the Tigers, it was like I was trying to do my work, trying to do all my cold calling, but in the back of my head, I'm like, man, how can we get started? How can we get our first Airbnb? How can we really start to get this thing rolling? And it was something where, a lot of people, when they're working a corporate job and they're trying to, jump that corporate ladder, that was something where I just knew it really wasn't for me. And so, it was something that, it was a long period of time where I was like, man, when can I quit? When can I do this? And it probably went on for a few months. And, I was like, I just got to rip the Band-Aid off. And that's where it goes back to Aaron's point of, you just got to get a start. It doesn't matter where it's at. It might be a tough and painful thing to do because you're going to go through, a lot of failures, and you're going to learn a lot of things along the way, but just rip that Band-Aid off and just jump right into it. So that would be my big piece of advice to, anybody looking to, explore different entrepreneur roles or whatever that may be. So, but yeah, really from there, once I quit the job with the Tigers, we moved out here to Scottsdale, got our start with our Airbnbs, but also at the same time too, it was always in the back of our heads that we wanted to do bigger and better, deals within the real estate space. We started looking at multifamily, what the syndication process worked and looked like. And from there, we started raising capital and, haven't looked back.
Yeah, I love that. Well, there's so many good key takeaways there and points. So, what I think is really interesting from a contrasting perspective is one, obviously, Aaron, you alluded to the fact that you got into the commercial real estate world. So, you kind of get privy to the underwriting stuff, sales, evaluating a deals, having actually for everyone, frankly, do, the process that you'll probably do eventually when you start buying deals, working with sponsors and stuff. But kind of going from the sales side of things is such a great way to do it. But then when you do the sales stuff, and then, obviously, Jacob, you alluded to this, you start looking around like, well, wait, I want to get to the principal side. I want to be the investor. I want to be the owner. There's the quadrants, of course, that, the purple book alludes to. There's the E and the I. You want to get to the I side as quickly as possible. So similarly, I was selling homes back in the day in Phoenix. And then you look around, it's like, okay, well, all my clients are making this money, making this cash flow. I want a piece of that game, not just a fee and kind of being a mercenary starting every single year, really, frankly, at zero. And you do this stuff for one reason. That's to get enough money, get enough assets, get enough capital working for you where you can just work or not work, right? You live life on your terms. So it doesn't really matter where you start. That's just where everyone wants to eventually go, right? So I think that's a very crucial thing. With that said, how did you both kind of land on the Airbnb work? Because remember, obviously, particularly being here, I've probably sold like 30 Airbnb homes, which is, a pretty significant chunk there. It was a craze. It was a hot thing. How did you both kind of identify that? And why did you choose that medium for kind of the linchpin to kind of get going? And were you kind of looking at, hey, if I have a certain amount of dollars working for me at said return, we could kind of phase out of, kind of working in the W-2 world? What did that look like?
Yeah, ultimately, it was because we wanted that consistent cash flow. And just looking at deals, we were doing a ton of research really on different markets, certain properties, what size property we would need to have to ultimately hit our cash flow projections that we wanted, like per month. So we were doing that. I know we came out to Scottsdale a decent amount prior to, I mean, when we were living in Michigan. We just came out here, like you said, love to golf. So whenever we came out here, just fell in love, and know that a lot of the snowbirds, a lot of high net worth individuals like to come here whenever it's cold in the north. They like to go out and golf. So there's always that high price target, especially in the winter months out here in Scottsdale. It definitely drops down in the
Like right
summer
now.
when it's, yeah, exactly. Whenever Waste Management here hits, and whenever we had Super Bowl and Waste Management in the same weekend, what was that, 2 or 3 years ago, that we actually got in that year, like that January. So it was just a perfect start. I mean, we were like, why can't this happen every year in
Yeah,
February?
it'd be great.
I was like, we love this for our houses, but ultimately it was just to, I mean, really set ourselves up so we could focus on bigger and better things is ultimately what we've been saying. But we dove in because even at both of our jobs, we were constantly looking at houses. I mean, underwriting them, seeing what they're going to cash flow, how much we're going to have to put into them. And we're like, this just sounds like the perfect business plan for us right now, because I know it really was that hot time where a lot of people were getting into Airbnb. I was like, anytime you go on a vacation or anything like that, you're like, I'm paying this much like for this house. And it's like, yeah, it's really nice, but they're making this much. You're like, I feel like everyone says, I got to like start one of those. Like I have to do one of that. And I feel like that was always something with our families whenever we went on trips, and we're like, why not just do it? Like, why not, again, just take that leap of faith? And I mean, trust the numbers, trust what you're doing, and ultimately just go and do it. So, like, not just say that you're going to do it, but actually go out and do it. So that's what we did. I mean, as soon as we came out here, got 2 properties, ended up furnishing them, getting them listed as quickly as we could. And then from there, it was just, I mean, the first day, or the first time we listed, I think that first week we had, I think like 2 or 3 months out, just like we had like 6 or 7 bookings within the first week. And we're like, oh my goodness, like seeing the amount of money that was coming in there that we were going to get just like from the first week, we're like, this is real. And we're happy about it. And I was like, I mean, it's nice that we're set up now, but now we're going to start moving some money into the commercial real estate world. I know we were thinking about getting a third, but we're getting involved in these bigger multifamily deals, which ultimately see better returns, but you're not going to see those returns until 3, 5 years down the road
Well,
where
it's a different world. Yeah, it's a different world.
exactly.
So you look at the Airbnb vehicle, which can be a little bit, controversial because there was some saturation points. Obviously, when you got into the market when you did, with probably an incredibly accretive interest rate, probably
Yeah,
imagine, you get, first time loan, whatever, you get a lower rate than what's obviously market today. You get your appreciation there. Um, but it's different than multifamily because you have the really high yielding cash flow. But it's kind of hard to force that much appreciation in that space as opposed to
exactly.
multifamily. It could be maybe a smaller yield. It could be, call it 3 to 7% of cash flow on the low end, 3 on the high end, 7. You just don't really know how these things shake out, right? But you get the big pops in the long run, which if you can blend that, that's kind of what the smart investors do. There's some vehicles like debt investing, Airbnb investing, that are, kind of those, mercenary-esque dollars where you're kind of doing highest yield interest income, almost like investing. And then you do kind of the more, not speculative, but the more kind of longer term wealth generation play, which is tried and true, which is the apartment-esque kind of style of investing, of course, naturally. But that said, before we kind of go into the apartment side and what you'd raise for, leaving the W-2 world, and I think just a point I want to hit on here, I think most people want to own their own business, own their own time in some shape or form. For some people, that could be, like my dad, who's a financial advisor. Yeah, he works for Morgan Stanley, but ultimately, he, like my brother, who works for Morgan Stanley as well, you own your book of business. You kind of own your time. Obviously, you're going to be working a lot if you're going to be successful, but it's really quarterly oriented. And my brother, who's in kind of the creation mode of creating his book, it's kind of grind until you get to that 40 plus phase where you've got your long-term clients and so on and so forth. But leaving the W-2 world is kind of a scary and treacherous thought Was that kind of always something that you guys wanted in you, being kind of just entrepreneurial? Because the earlier you do it, the quicker you can kind of make things work, make things make sense. You become a business owner. I remember selling homes. It was a very scary thing. There was times, multiple times, frankly, in the earlier days where I remember once I was about to go on a trip. It's like, okay, if I don't start selling houses here, I need to quit and do a different job. And then it started working out. And then I moved to Phoenix. And then I remember I was kind of going. I had really good momentum. I knew I was going to break through, but there was kind of some gut checks from like, shoot, I've got like, $10,000 left here, and I've got approximately zero income coming in right now because you eat what you kill there. And then you get these crazy months and pops where you can make $80,000, $100,000 a month selling homes, right? So kind of crazy stuff there. But leaving that world, what were some of the things that made you feel comfortable and confident, if you were to speak to someone younger, to kind of get over the hump there, whether it be, tips on finances, tips on maybe just spending a little less money, where you can take that risk? Because the best thing you can do is not fall into the W-2 trap. At least I'm a believer of that, where you don't at least have, and I say that ironically as a W-2 guy, but my situation is a little bit different with kind of my compensation structure, if you will.
Yeah, and that's the thing, obviously, like you just said, you can only kind of speak only on your situation. And I know for the listeners, you can just only try to put yourselves in our shoes and apply it to, your circumstance, your situation as best as you can. But, for me, like I said, when I was working with the Tigers there for a year and a half, it was a pretty scary, thought of leaving this job where you have a steady income, leaving for, jumping across the country over to Phoenix here. Just having that unpredictability of, am I going to get a check this month? How am I going to, continue to bring in money to pay for rent, pay for groceries, that whole thing that really starts to add up in your head. But thankfully for Aaron and I, in terms of timing, we couldn't have been more blessed with, the timing of things. We had just gone through COVID. So it was something where I actually had to finish my last, year and a half of school back at home. And then I got my job with the Tigers. I was still, living with my parents at home. So at the same time too, I was able to, keep stacking money and, keep stacking the savings account. So that really gave me some reassurance of, hey, this is going to be okay. It's going to work out. But when we made the jump, Aaron, what did it take us? Maybe 3 or 4 months to finally secure an Airbnb. So, we were going through those couple months, whether, how are we going to start to bring money in? So those thoughts start to pile up. But the big thing I can say is it's definitely a lot of mental. If you allow those thoughts to really take a toll on yourself, it will. But being able to just, go back to your motivation, what is your why? And just keep pushing for that is really what's going to help push you through some of those difficult times, as, Aaron and I definitely went through some.
You definitely get a gut check there in these days where, is it going to work out? Is it not? What the heck am I doing? Did I make the wrong path? Because you get one life, right? At least as far as we know, you get one life and one shot at this, and you don't want to waste time. And particularly when you're kind of climbing the ladder there, with regard to, working in kind of the sports industry like that, or just the sales industry. I mean, you can just make really gobs of money, but you might be owned, but you could get fired at any time. But if you're in sales, you're going to be making money, whether you go to tech sales, whether you're doing anything. High level salespeople make fortunes. Similarly, the brokerage world. I mean, you get go in the brokerage world in a robust city like Chicago, you could be sitting pretty, but if it doesn't really fit, with your kind of North Star, which was obviously getting the ownership side of things, it's good for nothing. And I remember one thing I was also thinking about was, you don't want to do something where you don't feel like you're going to be building that kind of thing indefinitely, or at least for me, I can't feel comfortable working or doing something if it's not going to have a compounding benefit, whether it be relationships, whether it be spending time from a career perspective. That's why I love working at Lone Star, because I truly look at this as my last place I'm going to work. Ideally, obviously it's a really unique situation, seeing as that Rob and I are very good close friends, the co-founder, of course. But I'm uniquely blessed in that sense. But, this is it. And that's why I can kind of go all in. That's why I can look, crazy with all my LinkedIn posting and kind of can do things I can do, because you have that all in, burn the boat mentality. So I just think that's a really important thing to hit on, is burning the boats, kind of assessing where you're at. And if your why is strong enough and you're passionate enough about it, you will make it make sense. But it's definitely gonna be scary, and there's gonna be gut checks along the way. That said, let's talk about the deals that you're looking for. So we were talking off air, of course. I think you alluded to this. You've done Airbnbs, you've done multifamily. So let's talk about kind of the multifamily. Or I guess I'll let you take it away. What are you looking for? Obviously, as capital raisers, and you guys have found success, very, very quickly here. What are kind of the deals that you're looking for, and your kind of process there?
Yeah, so right now we're actually involved in a few different deals. I know our mentor does more ground up developments in terms of multifamily, but then we also are our niche, I would say for ourselves of Twin Lux Capital, I would say is similar to Lone Star at a much smaller scale of being that value add multifamily where you see that maybe rents are not where they could be, or maybe it's a distressed property in some way where you can actually go in, increase value, ultimately increase the price, and then sell it in a few years. I would say that's really the main deals that we look at. But then we're also involved in a community development in Centerville, Ohio as well, where, I mean, you see where home prices are and how fast they're increasing with rates, and really the smaller homes that maybe first time home buyers or newlyweds are looking at. And I feel like ultimately it is a rental community, but I feel like especially from our side and our generation, I know a lot of people just aren't going out and buying homes, they're renting, and I feel like that's really what the future is going to be. I mean, that is why we're in commercial real estate world, in the commercial real estate world as well, because we just know I feel like we can sense it of where things are leading and just trying to get ahead of that, honestly. So really in sense of anything multifamily that we can get our hands on, or anything that we think is a really good deal, is where we're looking and focusing on right now.
Yeah, and then can we talk about maybe the first deal or one of the deals you did recently, I should say, which is with ASIM Capital and Hunter. What was kind of the makeup of that one? Just to kind of paint a picture, if you actually are allowed to talk about it. I think it's closed now at this point,
Yep.
but what was kind of the makeup of that one? Why that deal? What were some of the components associated?
Yeah, so ultimately, I mean, going back to Raise Masters with ASIM Capital, I know we first got our start with them. We formed a really great relationship with Tyler Lyons over at ASIM, and I always wanted to do something here in the Phoenix area. And I mean, that's where we ultimately want to do our own first deal. But getting involved in a deal with them has been great. The premise around that deal is it's a 72 unit just outside of Glendale, around Surprise, Arizona, and
Where the
ultimately
Cardinals play, for those who are wondering.
yeah, right by State Farm Arena. So the property itself is 72 units, mostly single or just one bedrooms. It was prior just a retirement community that I know has now been changed, but definitely older crowd out that way. But the owner was distressed in terms of having a floating rate finance term on their mortgage. So they were stressed, but really in terms of the property, the property was performing better than really you can imagine, of just kind of going in and getting a new loan. I mean, the ASIM team, they're not even projecting new rent hikes for the first year and a half. So everything was really conservative in terms of the underwriting, but you could just talk to the team, go out and actually see the numbers, and they were actually underwriting it less than what it's making right now, what rents are at right now, without like the projected 3% increases in rent bumps over the next 3 years. And just the way that the team really spoke about this one, I know they've done deals like this prior, so it's kind of like just another rinse and repeat deal for them. And they know they specifically focused in the Phoenix market area, so they know this area super well. I know they said they underwrote about 300 deals prior to finding this one. So we were really excited whenever this deal came across. We underwrote it as well, went through our process and thought it was a home run. So from there, we said we would love to partner with you on this deal. And we immediately went out and started raising for it. And we got a ton of great feedback, a lot of investors. It was oversubscribed fairly quickly from our end. So all great
Amazing
things.
stuff.
And we're excited that it finally closed this past week. Actually, just got the rate finalized, I believe, yesterday. Whenever the Fed said they're not,
Cutting.
they're not cutting. So the rate was finalized yesterday.
What
So
yeah, what was the debt term, out of curiosity, that you guys took out? If you can, I mean, ballpark, doesn't have to be exact.
yeah,
probably have to be mid sixes or so roughly if you did
Yeah.
fix. Yeah. But at any rate, that's awesome. And what I kind of am hearing there is essentially no property issue. The thesis of this investment, and there's a lot of investments that are kind of like this, is owner just was on the wrong side of a debt trade, if you will, and had a floating structure. Business plan is basically just to maintain, keep our operating costs reasonable, and really not even increase rents that much, or even banking on rent appreciating. You'll still get a good return. When you hear something like that, it's almost hackney. It's overplayed that conservative, underwriting, but that does actually
Right.
sound intuitively highly conservative, which I love to hear. So good stuff there, and we love Hunter, we love Tyler and the ASIM team, Bobby, great guys. So we love it when our friends work with our other friends and stuff. So it's a collaborative space, but it's great to hear that the deal is successful. So you like the rental thesis is what I'm hearing, right? So you like the Airbnb, you like build to rent, ground up construction, and existing value add multifamily. Those are kind of the four components you would say you raise for or are looking for.
Yeah. I would
Yeah,
say that's really
awesome.
what we hone in on.
Yeah, and what's very fascinating actually about the multifamily industry, and I don't know if you guys are privy to this or if you guys follow Jay Parsons, but Jay Parsons is awesome, Rent Roll podcast. If you don't listen to him or follow him on LinkedIn, he's truly, I think, actually the most interesting thought leader in the space right now. With all due respect to Hunter and Rob and myself and anyone who's in the podcast space, I think he's the best. But that's just me here. But that said, he was
We're
just
top
mentioning
3.
exactly top 3 exactly. With that said, super interesting that in fact the space is not owned widely by one person, which is super cool, which I think actually creates upside, right? Like, let's say if BlackRock owned 50% of the market space, it'd be very crazy for there to make movement. But people get greedy, people, get scared, people, mismanage stuff because it is so splintered. You can get really cool opportunities. So that's kind of one thesis to multifamily. But the other thing that is very interesting in the multifamily world, on top of kind of the shift there is not one owner and the changes and the forced appreciation play. So a lot to really love in the multifamily world. But the thing that you really hit on as well that I'd like to speak on is kind of the rental thesis and how, frankly, rents are, renters, the span of it, people aren't buying homes like you used to. And for the better or worse, the pricing's crazy. The American dream, I think, is shifting. I think everyone wants to own a home or so, but that's not that obtainable. So when you kind of look at the landscape of the lack of affordability around the place, how do you look at that and kind of anticipate that from a, thesis? Is that something that's kind of, locked in your head for kind of a reason as to why the space, or, kind of what's the thought there with regard to kind of the rental space there as opposed to industrial, the other stuff you could invest in?
I would say it's almost just kind of a side bonus from that perspective, because ultimately, in terms of multifamily, I know everyone says it. You need somewhere to live. The rents are always going to be there, and ultimately, like, it's not going anywhere. So from that perspective, I know industrial. We have family friends that are in industrial. It's super hot. It's doing great. I know office is still shifting around, trying to figure out what's going to happen. I know with the new administration, maybe workers are going to be forced back to work somehow. So I know some
If
of
they're
that
not
stuff,
fired.
right? So I know some of that stuff's still up in the air, but ultimately, multifamily is what really drew us into the real estate world, because I feel like from an investor's perspective, and just maybe people not even really understanding commercial real estate investing, they understand that the real estate world in sense of homes and people need a place to stay. That, I mean, you can go in, but a lot of people just don't think that you can own these multifamily complexes. I know a lot of people don't think it's attainable, but they don't think of it almost just as a business where you can go in, increase the value of it, and then sell it for a profit. It's just that's just not on some people's radar. Where for me and Jacob, we're driving around, we're like, dang, like how much did they get that for? Like, just wanting to really understand the numbers of any property. I mean, you drive around here in Scottsdale, Arizona, or Tempe, you see all these brand new buildings going up, and you can just look around and see that there's an immense amount of money being put into these buildings. And it's not dumb people that are doing it. It's wealthy individuals that know the game, they know the textbook, and they're using it to their advantage. And one of the biggest things that for me and Jay, whenever we get into this world, it's see successful people and literally just replicate what they're doing. You don't have to change anything. if they're working their way out, it's just copycat mentality. And if you just replicate what successful people are doing, you'll end up being successful.
Yeah, it's not more difficult than that, really, if you think about it. I mean, success leaves a blueprint. None of anything that you're doing or what we're doing is unique or different. It's just repeatable, it's scalable, and you're just kind of putting your own swing on it, but you're putting the work in and building the foundation. So I think really good takeaway there. With regard to people you work with, how do you vet sponsors and someone that you would want to partner with?
Yeah, so that's something we've been really working on over the past, what, Aaron, maybe a year and a half. And we got our first start, by joining Raise Masters, which opened us up and exposed us to a lot of different companies, individuals. And, from there, it's been a process of really just trying to meet people face to face, whether that's, hopping on for a quick Zoom, playing golf with you, Craig, and, going throughout that process to see where the interests align, not only from a company level, but on a personal level too. Because I feel like at the end of the day, like you said, you want to do business with your friends. And, that's what it comes down to. You want to be able to trust and lean on those people. So I feel like that's been a big part of our process over the past year and a half is, really just sitting down and saying, hey, we like these guys with ASIM Capital. We really like Tyler Lyons. He has a similar background and path as us.
Grand
We've
Rapids.
developed that. Well, yeah, we've developed that relationship, and I feel like it's almost like a domino effect of, hey, once you meet someone else, you kind of keep going down the road, and it kind of funnels that way. So, it's led us to this point, and I feel like we've made a lot of great relationships, and there's only many more to come.
Yeah, and then how do you kind of analyze deals? Like, what are some of the key metrics that get you excited or nervous for an opportunity, particularly when you get deal flow sent to you all the time? You might get deals sent from us in Texas. You might get deals sent to you in Arizona or Colorado or, even Illinois, right? You just don't know what's going to come on your desk. It's sometimes, even though if it's a multifamily, it can feel like apples to oranges, particularly when you analyze property taxes, insurances, right? You go to Arizona and property taxes and insurance are basically next to nothing when you contrast it to some of these like Houston. So it's very tough to analyze, stuff like that. So with that said, how do you kind of make an educated guess and get comfortable behind, a deal, an operator, and an opportunity?
Yeah, really kind of what Jacob was going off of from the operator standpoint, seeing how many deals they've done, what their deals look like in the past, how those turned out with these new deals that we get coming through pretty constantly. Ultimately, it's those relationships, but then you want to make sure the deal works as well. So looking at it from an investor's perspective of, okay, what is the cash on cash? What's the equity multiple? A big thing is maybe looking at the DSCR of seeing, okay, maybe you don't want to be in a deal that's too over leveraged or don't want to take that to our investors who may be a little bit more conservative. So ultimately, just trying to work with ourselves and our investors of creating a base foundation of really what we look for and what kind of numbers and returns that we're looking for. And then going out there, like you said, looking at the insurances, the taxes, understanding the specific market overview. So if a deal comes across, maybe we're not familiar with the specific market overview, we'll kind of do a deep dive into that and get a better feel of what's going on in that market, because ultimately we love the Phoenix, the Texas, the Nashville, and that's where a good amount of our resources are and a lot of our investments are. So we have a good grasp on those markets. But we just did a deal, and we're currently doing a deal, working on finishing one in Centerville, Ohio, and that was new for us around the Dayton, Cincinnati MSA. So for us, it took us a few months. We liked the built to rent model of which this deal is and the asset class that it is. And ultimately, whenever we were going through the numbers, and this was another deal for the Red River team, who is the lead sponsor on this deal. And ultimately, whenever you see their projections, what their past deals did, and this was actually the most profitable one that they were projecting the because of the population there and what their really bringing in each year. So that was a big thing for us. But ultimately, just going through each deal and trying to figure out which numbers work and what we like best, and then running with it from there.
Yeah, makes sense. I mean, fortunately for the better or worse, uh, underwriting is pretty simple, straightforward. But if you give 10 different operators the same deal, you can get 10 different inputs and results and stuff like that. So that's why it's very hard to figure out who's credible, figure out how you decipher a good opportunity or not, and also marketing, for the better or worse, it does in fact work. So with marketing working and salespeople that kind of chip away at you, kind of build good relationships, that's kind of what I do. You would hate to be dissuaded because of personal relationship. That's why I love Lone Stars, because hopefully I'm going to chip away at you. But our deal flow is so good and you like us so much that it makes sense. So all kind of the components hit there, right? But I'm sure the groups you're working with, obviously you can speak to Tyler and ASIM. They're awesome. Can't speak to that group, but I'm sure they're fantastic. And I know what we do here and what we bring to the table. So all good stuff there. I have a question actually just specifically pertaining to your business. So how do you divvy up responsibilities? And of course, it is Twinlex Capital, because believe it or not, people who are watching this, these are twins. How do you divvy up who does what and kind of decipher responsibilities of looking at deals, underwriting, taking on new investors, all things of that nature, systems, what are the roles and responsibilities you like to kind of do with one another?
Yeah, so I'll just jump in on my side, and from my sales background, I'm more on the side of things of trying to pull investors in and being able to communicate with them, onboarding them throughout that process. But also at the same time too, it's kind of a crossover where we have our hands, in both areas. But I would say, Aaron can speak to this as well, but I would say he's more on the underwriting side. He's constantly vetting and sourcing for deals and trying to set up those relationships with those operators and those sponsors. But really, from my standpoint, I'm looking to increase our investor base and really start to grow that network. That's really what I'm looking at, as we stand today and as we go throughout 2025. That'll really be my major goal, or key responsibility for Twinlex Capital, is to continue to grow the investor base.
Makes sense. Good stuff.
Yeah.
Awesome.
I think just our backgrounds really explain both of our kind of positions, just as Jacob mentioned. Definitely me coming from the brokerage side of doing a lot more underwriting, kind of doing a lot more diving into deals, while he deals definitely more the sales side. So I definitely feel like we complement each other well, and then we both help each other out whenever we need it as well.
Yeah. Aaron, out of curiosity, do you ever see deals that get sent, through the various channels, if you will, that just look absolutely ridiculous to you from a fundamentals and kind of structuring perspective?
All the time. I see a good amount.
What would you say the biggest kind of red flags are that you see, the biggest kind of, okay, this is just not credible stuff that, maybe make you laugh or just instantly have you say no?
I would say some of the things, we can look at some deals now, and then I'll just kind of maybe, if they don't have, if we go to try to underwrite a property and they don't have an actual T12 or a rent roll, and it's some kind of, I don't know, fake projection, or they don't have anything hard evidence, or, if it's a deal that someone's trying to, or if you go in and the DSCR doesn't make sense, or if you have to take a loan out for like a crazy amount. I feel like there's a lot of different things whenever you're looking at a deal, especially because I know we get deals through various channels. So whenever they do pop in my inbox and I look at them, you can kind of tell if, depending on the cap rate, what the rents are at, what they're trying to sell at, or even just going in and figuring out when this buyer bought this property and how long they've owned it as well. I think that's another great little detail. But ultimately, try to shy away from deals that maybe look too good to be true. And whenever you're underwriting, you'll kind of figure out, okay, like how did they end up getting this, or where did this come from? Like, this doesn't make sense. You want to find a deal that is honestly good for the buyer and seller. Even from the brokerage side, that's what works. Those are the best deals that are going to work for you as an investor, because if there's something that seems to be off or seems to be wrong, it probably is. So try to stay away from those ones. That's why, off-market deals are always great, but whenever you are working with a broker, it does help because there is that sense of credibility there that, I mean, works with both sides and tries to achieve a common goal for both.
Yeah, it's actually a very interesting point there, which is, it should feel like a win-win-win. And that's why real estate's great. It's collaborative. All parties can win. Title people, escrow people can make money. Lender makes money. Seller makes money. Buyer, gets their fees. They get to do their project. And investors can, obviously do well as well. So I think it's super important. And spoken like someone who's truly been in the real estate business to make a comment like that, because you don't hear that often. It was actually the first time someone's actually, in fact, said that on this channel. So super stoked that you just kind of mentioned that insight. That said, gentlemen, you've been great guests. I can't keep you forever, sadly. I'm excited to play golf with you both tomorrow. But where can people find you if they want to reach out to you, connect with you in person? Obviously, you'll be at Raise Fest. I don't know when this is going to come out, but hopefully they can connect with you guys at Raise Fest. But where can people find and reach out to you?
Yeah, I think the best thing would be twinluxcapital.com. Both of our emails are in there. And I believe the links to our LinkedIn as well. We're both really big on LinkedIn. So even if you just look us up of Aaron or Jacob Thomas, Twin Lux Capital on LinkedIn, we have a lot of stuff on there. But I would say those are the best resources.
Excellent. Well, gentlemen, thank you so much for both coming on. Look forward to connecting with you here, obviously, coming up shortly. I'm excited to follow your careers, watch your success, and obviously work together and do some business together in 2025. For all those that have been listening, we appreciate your time, and we'll see you next week.